Check, mic check. All right. Good evening, everybody. I hope everyone's having a great time. Hope you had a good restful weekend, everyone. So thank you for joining us tonight. And we are going to take a look at the market. We're going to talk a little bit about what happened last week, but mostly want to take a look and see where we think we're going to go in the coming weeks, month as well. And we're going to start from that monthly time frame and look downwards. Okay, so this helps us cultivate a higher time frame to lower time frame analysis. First of all, we just broke 250 subscribers, so I can't thank you enough. I hope I can continue to add value to you and give you good, solid, valuable content. If not, drop me in the comments. Message me on Twitter. Just at me on Twitter, and I'll see it and let me know how I can help best as within what I think I can help with, and if I can make things clearer. So, with that being said, let's head over to the charts. So here, next week, economic events. On Monday, we don't really, I actually mislabeled this. I'll fix the title later, but Tuesday is where we actually have stuff. On Monday, October 23rd, there's nothing here. And on the weekly, we can kind of see that we had a pretty large range day, or range week. So we kind of expect Monday to be let the market figure itself out and tell us where it's going to go that particular week. But we have some biases as to where we think the week will go and the month will go. So we'll talk about those in a little bit. So just be wary. There's not a lot of stuff happening on Monday. There's not a lot of stuff that you'll have to be watch out for. There can be manual intervention, but I don't know what's going to be there. So just stay nimble. Don't be risking max leverage, and you'll be fine. So let's take a look at the charts. So right now we're looking at the monthly chart. We look at this every week. Every week you do a analysis on what happened that week. Where was it going? Did it draw towards your higher time frame bias? Did it not? What indicates that it will still? What indicates that it won't? So from a monthly perspective, remember, we came up and touched this area and rejected right there, right? So is it feasible or plausible that we go, that we kind of see price head downwards towards next areas of liquidity? Oops, my bad. Yes, it is. And what might those areas of liquidity be? So I have these monthly levels. All the red lines are monthly levels marked out, and you'll see that we have these black candles and these wicks here. I know it's a little messy here, so bear with me, but these wicks have they tell us, hey, on the monthly perspective, we have some areas to touch before we can go back upwards. We have some areas of imbalance that we need to touch. So for that reason, I think that with this imbalance here to here, that's a big monthly imbalance, right? There's only been buy side on the month. So what does it need? It needs sell side, and there's sell side inefficiency on this run up. So we are targeting a go down. It might not go all the way down immediately this month. It might head only down to this this monthly buy side imbalance, consequent encroachment. But I do think that we'll head down there, and as we go down to lower time frames, you'll see why. Okay, so let's head down to the lower time frames. This is what frames your bias, right? So, or frames my bias at least. You can choose to be biased or not, but I know what I'm going to be looking for. If I could get this to work. So on the weekly itself, right, we are here, we're still in a premium. We see this weekly fair value gap. I think it's going to reach towards that next. We can kind of see Monday, maybe Tuesday reach up, potentially take out this this volume imbalance here and get to this new week opening gap, old new week opening gap high, which happens to also be the bearish order block as well. I would be reticent to see it go above the midpoint of this weekly candle wick here. That would not be great because it would mean that it is starting to creep above a previous bearish PD array. And so we don't want to see closes too much above there. It can trade up there, but we don't want to see closes up there. One thing that I do note is that this old week, new week opening gap high is looking like a rejection block on the weekly. Keep that in mind, okay? So what do I see that still hasn't been taken? Well, they came down here. They teased heading down to take out these 14,587 relative equal lows, which also happens to be in a nice weekly fair value gap here. So I think that there's a lot of stuff to aim for down here. Does it have to go the whole way? Absolutely not. You know, this weekly consequent encroachment, it could be where it stops. It actually would also be a discount daily BISI, which we'll see in the next time frame. But from a overarching flow perspective, because we've opened upwards, I have a feeling we'll at least tag the midpoint of this volume imbalance, or maybe even more here. So because there's this imbalance, or sell side imbalance to the downside, and we could go all the way up to fill it back out, wick up here, and then start to trade downwards for the rest of the week. So it's possible it doesn't make it to this low by this week, but I'm looking for it to make it to those lows at some point. It just depends on, you know, maybe what's happening over in Israel, what's happening over in Asia with China, Russia, Russia and Ukraine. What kind of events happen on the macroeconomic level? You need to be paying attention to those. You don't need to be getting angry at, you know, who's pro-Palestine, who's pro-Israel. Let the other 95% of people get angry or lose their emotions over that. You as a trader need not pay attention to that kind of stuff. So you need to be focused on where can the market algo be taking me next? What's most high probability? So that's it on the weekly. I don't want to see it go much above here, but I'm allowing it the capability to do so. And I also would prefer, let's see what the midpoint of this is. I would prefer it not get too much above 14,775 as well, because that's the midpoint of this wick here. I suppose if it does get up there, that I would next not want to see it go too far above 15,012. So that 15,000 even level on NASDAQ, I wouldn't like to see it too much above that, because then that would mean that we're getting above that bullish order block mean threshold. So those are the things that I'm really watching for this week. I have those levels written down, and you should too if you would like to, just to pay attention to those, especially if you don't want to keep these weekly and monthly levels on your chart. It gets really messy really quickly. So then let's take a look at the daily, okay? On the daily, so as you can see, this past week, we rallied up on Monday, Tuesday, came down, some people were buying the dip, basically. Those buy the dippers got wrecked this day, wrecked that day, and whoever bought the dip down here thinking we were done got wrecked on Friday. So there's a lot of sell side these past few days, so a retracement to certain levels could be certainly healthy. There's a new daily, if I can mark this here for you to see. Now there's a new daily level over here, a fair value gap, a sell side imbalance, buy side inefficiency here and here. So those I will go and mark later, but they're 14,979. So we'll keep that there for later, and the high here is 14,887.75. Pretty close there. So you'll want to have that on your charts, because on the daily, I could certainly see us traveling up to that point. And what does that look like? Let's go from the body to body. So this wouldn't even be a premium fair value gap, right? There's nothing up here. The only thing that's premium that I see first is this wicks midpoint, and then followed very closely by a bearish order block here, which we traded to and rejected from. So I think that we certainly trade maybe up to this fair value gap, maybe 50% of it, and then we continue downwards to take out these relative equal lows down here. Now this is where I think we're going to go. Let's see, Monday, Tuesday, Wednesday, Thursday, Friday, roughly. I believe we are headed down in that direction this week. So that's what I'm going to be looking for this week. Okay. You can see that on the daily, we've got this fair value gap here that the team can certainly be aiming for. And we see this 1 day premium SIBI low, and we can kind of see this is probably we could label this as a 1 day, 1 week, and 1 month, 1 week, and 1 day high, because that's all that's left. We've traded down to here out of this whole daily fair value gap, and we have this remaining. So this is where price is feasible to go down to, is right below those relative equal lows. Whether or not we move past those lows and then immediately reject and bounce, or if we have a really nice candle all the way through, we will look for it to retest as a breaker, high, low, higher, high, high, low, higher, high, and then lower low, back up to here, and then even further low. The reason I think that that's possible is because we have so much beneath us, and we haven't even hit the upswing equilibrium point. So it's not viable for institutions to purchase yet. And so my bias continues to be bearish until I see something otherwise. This may form a short-term low here. And I think that that's going to be a false low. I think it's going to lull some people into thinking, oh, okay, great, we can go back upwards. But I don't think that's actually going to happen. So keep that in mind there. On the 4 hour, we want to see what fits into the narrative here. So on the 4 hour, that's probably the easiest way to see what ICT calls a market maker sell model, where you see price ramp up. The market maker institutional entry here, first distribution, redistribution here down below here, and it hit these relative equal lows, which serves as a breaker here, and then we can take that down all the way to some of these rejection points there. So 4 hour, we do see that on the 4 hour, we have these blue boxes are the 4 hour gaps. So we are in a heavy discount based on where we are at within this run. We're certainly in a discount in this run. So I think that news will probably pull us down out of that. So I don't know. On the 4 hour, I mean, it does look like it's reaching towards this fair value gap, but I don't want to rush it either. So I think that it can certainly trade up first before it goes. I think that one thing to consider is you can kind of see how each one of these bearish order blocks was populated, respected. Order block hit, respected. Order block here, comes back, price comes down, price comes back up to it, and it respects. So this is the tail end of a market maker sell model. What happens at 14587.25, sorry. Well, that's going to determine the direction that we go. Macro, I think I'm still bullish, or sorry, bearish. If I could not do that. But, let's see what the market thinks, right? And so let's head down to the hourly next. Okay. similar to, we identified a few of these boxes back before, and we wanted to see if we would still see immediate rejection from those, and we did. And we no longer need this London low because we already have the other low that we're well beyond. So I think we should be good on that end. So let's head down. Again, like, for those who are just joining, we believe that Elon is waiting for these two lows to really get hammered so that we can actually enter, right? So I think once that occurs, who knows what'll happen there, but that is something that we're watching manually. We want to make sure that we're nimble enough to change our positions if we get caught on the wrong side. So that is why we look at these from a top-down perspective, so that we know, hey, every 60 minutes, this is what's going to run, or every 60-minute interval, this is where price is going to go to, rather. So let's go down to the 15-minute. Okay, so as you can see, the previous week we had a lot of downtime, right? Right now in Asia markets, we can see that it's consolidating a bit and slightly rising, so slightly higher highs and higher lows as well. We do have this liquidity void. I anticipate it's going to get taken out later this week, but right now price is making it up to that weekly volume imbalance that I have shaded here in gray, as well as the real-time opening range gap whenever that comes in. So don't pay any assistance to the don't pay attention to those real-time hour opening range settlement lows and highs just yet. I change those after 9:30 every morning. So with this consolidation here, I think that they're going to end up taking price a little bit higher before they take it lower, because we've had so many low days this week. So I think we're going to take it higher, maybe hit a turtle soup, and then head downwards the rest of the week. So that's my thought process based on what I see here. Hopefully that jives with our team. Let's see, what was I looking for? Okay, well, can't find it right now, but no big deal. So I think that's really it on the macro side. I mean, if you look at the 60-minute and then you look at what's after, there's not too much that's been identified. So hopefully there's nothing else that gets identified out of the blue, but we'll monitor that. Okay, so the sell side liquidity got taken here. Old new week opening gap, immediate rebalance. That should have keyed us that this was the play next. We see as well that none of these buy stops kept on getting overwritten. So nothing from this high school to having something added, just some minor issues, it looks like. So there's not a lot. So either way, when you're looking at this, you will want to wait for the price to give you a direction, especially Monday. Monday is going to be really difficult unless you're really scalping. I would stay away from it if at all possible. Let Tuesday and Wednesday help guide your studies, rather. So I think that's it for today. There's no point in really going down to the 1 minute and 5 minutes right this moment. So you can certainly use those as entries. I certainly look down to the 5 second for some entries sometimes. Um, but yeah, I think that if there's any questions, you know where to find us, add us, get Jeff, or get somebody. Oh wait, hold on. Sorry, I'm delirious right now. I'm talking about like I'm talking about some of the worst things that my brain switched over to. Sorry about that. If you are looking for where we are going to go next week, I think we're going to head up into the volume imbalance, take out this area of liquidity on the 15-minute, take out potentially, if we can, take out this area of liquidity up here too, and then head downwards as we get into some of our weekly big boy levels. When it falls below here, this 14,587, it's going to be really crucial that you wait to see, is it going to show a market structure shift and then start to see displacement to the upside. Is that what day of the week is it? Is it in the beginning? Is it Monday, Tuesday where we get that kind of volatility? What happens then? So so yeah, I mean, the major big draws on liquidity are still to the downside. So I think that the algo is going to continue to the downside in the coming week. Maybe after a bit of retracement to the upside. So, but let's see. I mean, maybe it could just completely change and everyone's good with everything, and let's let stocks rocket. Who knows? So I think that's it, though. I'm not going to go down into the 5 second, 1 second. It doesn't make sense to 1 minute. It doesn't really make sense to unless you're actively trading. And yeah, I think that's it for today. Hopefully you learned something today. Hopefully this was a short enough lesson, but so going into next week, let's look for some fair value gaps to fade. Let's look for some, if those fail, let's look for some previous highs or swing highs, swing lows. And that's where I'm going to be framing some sort of HR type combination of roles. And yeah, I think that's it. So I am going to go sleep. I'm very lacking of sleep right now, as you can tell. I haven't really had good sleep this past weekend, so Monday is going to be probably a no trade day for me. Unless I see something good, I'm going to just risk one micro NASDAQ. So Friday's results were pretty good. Ended up getting, what does this say now? Ended up making a play on 4 accounts for about 186 each, which is pretty good for micros. And then another set of 4 accounts has about 200 some, and then there's the 3 accounts that are slight drawdown. The one actually I'm clawing back from almost like 2 trades away from blowing it. I decided that I wanted to save it, so that's going to be a really fun one to save, but have to be quite cautious and hope that the trades that I do see are higher probability in order to get those through. Okay, I think that is it. Good luck next week. Wait out Monday if you want to look for the higher probability trades. Don't get FOMO, it's fine. Or if you want to trade, fine. Like, I'm not going to stop you, but it is something that I'm considering doing. So with that, I think I'm going to call it. We'll catch up tomorrow morning, and yeah, good luck and get some sleep. We'll catch up tomorrow bright and early. Take care.